June 10th or June 10th. It is June 4th, Tuesday. And as we do every day, we'll zoom out to the monthly chart and help us maintain a little bit of perspective. Yesterday was the first day of the month, as you can see right here. We are trading basically right at the high of a monthly balance. And this is going to be an interesting concept heading forward because we're actually trading at the low of a weekly balance. So we've got some conflicting information, making it so the key of this week is going to be last month's close, and that's that 52.95. Now 52.80 is going to be a key area as well, which is kind of where we're trading at right now, but 52.95 seems to be the key so far. Now switching over to the weekly, you can see we kind of rallied back up. We're sitting kind of in the middle of last week's range, or towards last week's -4 close, which was 52.95. That's going to be a key area that we want to be paying attention to. The 52.95 settle below that lets momentum shorts maintain control. So even though it doesn't seem like it's that much lower because the market traded so much lower last week, that's going to be a key level that we continue to maintain or to continue to pay attention to. Below that, you have the opportunity for momentum traders to pile back in. Above that, right, decent opportunities for short coverings coming in. So it really is going to be kind of the line in the sand heading forward. Now switching over to the daily, you can see at the daily, we are trading in a balance, right? We had this rather large balance here for a couple of days. Was this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. We got that breakout, didn't hold, and now we're kind of blasting back in with that close 97 yesterday. But we are trading 82 here, so we're trading right towards this low of balance. So is this a retest hold, or is retest and reject? That's going to be kind of the key thing that we want to be paying attention to. Remember, a lot of times when you have these longer term balances, this isn't like a few days of balance, it's 10 days of balance, so almost 2 trading weeks of balance. So it tends to take a little bit longer to work itself out or to really make a decision on what it wants to do. Now, yesterday was a +4 day. You can see it is turning blue, and the reason it's turning blue is because we had -4, then a nothing, then a +4. So kind of role reversal. So you get momentum traders coming in on Thursday. Friday, we got that huge rip back in, and then yesterday we traded much lower, but then rallied back. Make sure these 24 hours on. And we're pretty much just kind of holding steady right now. So the close yesterday, 52.97 quarter, was just a couple ticks higher than our monthly close and our -4 weekly close, which was 95.5. We're trading below that. So we've got a +4 and a -4, so we've got a little bit of momentum. So the key here today, and we can go ahead and switch over to the profiles for this, is we want to be using that as our pivot. And now the title of the video is how to spot the weak spots. And so we talked about this yesterday, but there is a key level here that is these little set of liquidity. They're not technically single prints. We call them Brad prints in here, but this area here, should the market get below that, then the downside is going to start to pour in. If the market keeps moving lower and fails to trade below that 52.40, then the market still has an opportunity to get accepted back inside balance. Now, like I said, the key levels today, this 52.80, which is right in the middle of that low balance, and then these settles. We had a +4 settle yesterday, and then remember our monthly close, and was also a weekly close, was a -4. So above that, you start to get, real bullish, and the market probably continues to trade higher. I wouldn't be surprised to see, like we talked about yesterday, a little bit of rotation inside this range. We got a nice range yesterday, 66 points. Overnight inventory, for the most part, I would say neutral just because we didn't get a VPOC shift down. Most of the volume's coming in overnight, and then we get into this liquidation here. We do have the JOLTS job report 9 o'clock this morning, so that might shake up the market and really kind of pay attention to where that's going to be. But yeah, for the most part, I think you're probably better off. I mean, it's going to be choppy today, it looks like. If we can get below this level, I think below the 64, there's some opportunity to maybe come down and test those 40s. Inside here, I think you're really just going to get chop. And then if we get above the settles, I think that's where we look to start getting long. Um, and it as as kind of as general as that sounds, it really is kind of, I think, the best opportunity as far as where we want to where we want to play today. Now, not that there's not going to be any opportunity in between this area. Of course, there's from 90 to 60 or from 90 to 70, you've got about a 30-point area, so there'll probably be some opportunities. Um, you've just got to be cautious. If we can hold this ledge, which is basically right where we're trading at 85, there is some opportunity there to trade up, I think. But below that, you start to get acceptance, and it probably gets a little bit choppy as you get towards that Globex low. Now, the Globex low is starting to form a little bit of a 45-degree angle, and we have some excess here on this previous low. So that's definitely something to take into account, as you may find some buyers, or the market may have found some buyers down there. Most likely, and kind of what I'm thinking, especially if we pop these profiles up, like we talked about, we have these two liquidity zones down here. Market traded lower. There was enough shorts trapped in this lower distribution that started to cover. The cover started to cause a little bit of panic. Yesterday, I think a lot of people piled in to the sell side. As you can see, that 45-degree angle kind of forming off basically right where the market broke out is kind of telling us that there was some short-term shorts, momentum shorts, kind of stuck short yesterday as the market rallied. Um, so key here today, just 85 to 93. Look to stay long above that. Inside here is going to be probably shit. Below this, look for acceptance, test of excess, and then really that key to unlock the downside is a break through that 40, showing acceptance in this lower distribution. Now, one more thing before we go. Today is going to be the end of our COT chart. So we can kind of try to envision it here. And if we take a little peek at the COT chart, we can see where the point of control is at this untouched point of control, 53.21. So a hold of this 80, 90 area, that's probably the target, 53.21. Fail to hold that, right? You get that look down for 40, but in reality, the market's probably looking for that 5200. And then we have one more gap down here, which is around that 67 area. So that's where the market is going to be targeting from the 40. If it breaks below the 40, probably going to be looking for that 67, and then that 5180 will be kind of our go no go level. Below that, the market starts to get weak. Above it, you start to basically get back into it, and then above here is bullish. So it's like a neutral zone in between the 80s here. Kind of, it could go either way, and I think it will be a battle. Below, sellers start to win. Above, buyers start to win. And then we just follow the volume, right? Follow for that confirmation. But other than that, you guys have a wonderful day. Make sure you're managing risk and sticking to your trade plan. And I'll see you guys tomorrow.